The stock market is at its all-time high and it's starting to get scary. CNBC just recently published an article about their theory on what is pushing stocks so high. And the answer is, it's not you and I. It's not mom and dad. It's not grandpa, grandma. It's not this guy. That was random. It's actually hedge funds.
It's not me.
And it's not Corey. It's actually hedge funds playing catch up, and that's never a good sign. We couldn't have timed that better. It's like you let him go on time. The stock market crash of 2020 is coming. In fact, I just recently got an email from a viewer that reads, "Hey Andrei, I've been watching all your videos on YouTube for a while, and I need some help with my funds. Currently, I have $7,000 sitting in my bank account, and I'm not sure where I should invest this money and how. I need some advice from you before I just invest it randomly. I know the stock market is going to crash soon. I don't know if I should invest now or wait until after." And this got me thinking, like, what should I do? This is my stock portfolio with Robinhood, and it's sitting at just over $200,000 right now, which is not a lot of money, but it's certainly not a little bit of money, and it's taken me a long time to get to this point, and it would be terrible to just lose it all, right? So how easy would it be to just, with the swipe of my finger, because that's how easy Robinhood is, to just sell all the stocks, convert it all to cash, sit on the sidelines for a few months, wait until this stock market crash, and then buy back in at cheap prices? I'd be really interested to know, because that's what we're gonna talk about today. So if this $100 bill right here was the stock market, is it really gonna continue soaring higher and higher and higher? Or will it inevitably find its collapse and just ignite right into flames? Who knows? Ah! Oh God, I'm losing brain cells. Hi, my name is Andrei Jikh, and I'm relatively new to YouTube, but I've been investing since about late 2014, and it's taken me a while to figure out why I wanted to do something called dividend investing to FIRE. That's Financial Independence Retired Early. F-I-R-E, FIRE. Come on, that's the coolest thing ever. FIRE, because if you're not making money while you sleep, you're gonna work for a very long time. But recently, I've been hearing rumors about this upcoming recession and the impending stock market crash. Everyone sell your stocks now. That's all I'm hearing. And as an investor who invests quite a bit of money, the thing that scares me the most is that dreaded phrase, "This time, it's gonna be different." So will it? Because if it is, that's gonna put a huge setback on my plans to retire early and never have to work a day in my life before I turn 40. So naturally, the question becomes, should we sell right now? Or should we continue investing and keep going on this tear that this crazy stock market has been in this crazy bull market? In order to understand the answer to this question, we first have to explore why people are saying this. Why are people so afraid right now? And the answer is actually really simple. It's because of social media. Everyone is afraid. Everyone is talking about it, and social media spreads fears and rumors, and because of that, everyone else is saying it, and in turn, everyone else is talking about it too. In fact, if you go to Google Trends right now and you look up stock market crash, you can see the trend is almost at an all-time high for January in 2020. And the fear is really real. And most of it is coming from Idaho, the Carolinas, Georgia, and Kansas. So basically the Midwest. I'm not sure why. Also, if you are an aspiring YouTuber, Google Trends, people. Google Trends. You're welcome. I'm dropping gold nuggets here for free for y'all. But there are some fundamental truths to this fear. Unfortunately, most people don't understand exactly why this is, what the indicators are, so I want to share with you the real-time actual indicators for determining why this could be a very real possibility in 2020. Now, I've been told I look like Russell Crowe, so cue the music from a beautiful mind. Indicator number one is something called the inverted yield curve. So let me try to explain it to you as simply as I can. What it means is that long-term investments are giving you a smaller rate of return because of smaller interest rates than short-term investments. In fact, long-term investments represent a higher risk than short-term ones, which doesn't make any sense. Because if you're gonna park your money away for 10 years at a time, Ideally, you'd want your money to make more money with a longer term investment than a shorter one, right? Otherwise, you just continually invest and make short-term decisions. When we're talking about the inverted yield curve, specifically, it's looking at the 10-year treasury bonds and it compares them to something more short-term like 2-year treasury bonds. And if the short-term treasury bonds are yielding a higher interest rate, that's when we get the inverted yield curve. Now, when this happens, it is oftentimes an indicator for the stock market's inevitable collapse, like the countdown has started. But basically what it means is that investors believe that interest rates are going to fall. In fact, if you have watched any of my Robinhood videos here on YouTube, you will have seen Robinhood slash their interest rates on uninvested cash. You will have seen this with high interest rate savings accounts like Ally Bank and many others. Now, historically, we have seen this in the past, and it's been a pretty reliable indicator in showing us the last 7 recessions successfully. But don't take my word for it. I did an ungodly amount of research for this video, so let me show you. This happened before during the 80s, it's happened during the dot-com bubble bust around 2000, and it preceded the 2008 recession as well. Pretty telling, isn't it? Yeah, it's scary. However, now we are uninverted, which means the long-term bond interest rates are higher than short-term ones, which is a good sign. But remember, this is just one of many indicators, and just because we were inverted in the past does not suggest that we will inevitably go towards some crazy stock market collapse, because also the inversion wasn't quite as bad as it has been in the past during the other recessions. So that's one thing to note. The reverse is also true. Just because we're now out of one does not mean suddenly we're going to be okay. Remember, this is just one of many indicators to determine the health of the economy. And also, it's just my way of being non-committal so that I don't look like an idiot later. And also, I just want to turn these lights on. I like the way that looks better, so let's just continue like this. And indicator number 2 is the ISM index, more specifically the PMI, the Purchasing Managers Index. And it takes a look at the manufacturing side of the economy month to month. So more specifically, it looks at things like production rates, employment rates, inventories, takes a look at supply chains, anything related to manufacturing, which is why you'll hear politicians often talk about bringing back those gerbs, specifically in the manufacturing sector, because it is so closely tied to the health of the economy. A PMI score of less than 50 means that this important part of the economy is shrinking and it's contracting. A score of exactly 50 means no change month to month, and anything that's above 50 means that this part of the economy is growing and it's expanding. Right now, the score is at 52.4, with forecasts of that number to be growing, which is a good sign. What this probably means is that investors can be bullish for the stock market in reaction to higher profits when the index score is above 50, which right now it is. That's a good sign. Indicator number 3 is the Warren Buffett indicator. Now, that's not really real, I just made it up on the spot, but how can I not address appeal to authority when humans love to worship other humans? So here we go. You may have heard that Warren Buffett has built up a huge cash position of $130 billion. That is insane. There can be no bigger sign of a coming stock market crash than having the smartest investor that has ever lived having so much cash money sitting on the side. He must be waiting for the crash, right? That makes sense. Well, yes, but no. Here's why I think he has so much cash. I think Warren Buffett has run out of ideas how to effectively deploy and invest his money. In fact, he calls it his nightmare scenario, and I think it's kind of coming true. Because Warren Buffett is a value investor, and his nightmare scenario means that stocks are overvalued while his company is not undervalued. And so he's paralyzed by his own process of always trying to find a good deal, so he's run out of ideas. In fact, Berkshire Hathaway posted its worst performance in 2019 since 2009. It trailed behind the S&P 500. Now, I love Warren Buffett as much as any other investor out there, but all I'm saying is that even the Oracle, the smartest investor alive, can get it wrong from time to time. And indicator number 4 is Ray Dalio, who's an extremely intelligent and well-respected billionaire. And he bet 1% of his entire hedge fund, the equivalent of $1.5 billion in insurance put options contracts that say that the market will move way lower by March of 2020, which is when the contracts expire. So we're about to find out really soon if this really smart dude is right or wrong. And that's got a lot of people scared as well. So those are just some facts and signs, but we could take a look at a whole lot more, like gold prices going way higher, which means uncertainty in the market. We could take a look at the case fright index. We could take a look at the global economic policy uncertainty index. We could take a look at business spending. But Andrei, how in the world do we make sense of all of this madness? Now, there's no one who can reliably predict a stock market recession, but if somebody was to force me right now to make a prediction, I would say the odds of a recession or a stock market collapse are extremely low in 2020. In fact, I would put the odds at 25% chance of it happening and 75% chance of it not happening at all. And this is at the risk of putting myself out there for everyone to see on YouTube, which is terrifying to do, to make predictions, because if I'm wrong, this video is just gonna haunt me forever. He said there wasn't gonna be a recession, and there was. Idiot. But also remember that I'm just a YouTuber, not an economist, and even if I was an economist, I would still get it wrong from time to time, because it seems like when it comes to the stock market, or the economy, or just life in general, whenever there's an overwhelming expectation for something to happen, almost always, the exact opposite thing happens. Just like in 2007, remember? When everyone was getting rich with real estate and shouting, "Oh my God, I'm getting so rich, everyone should own 10 houses." Or when I was supposed to get Final Fantasy VII in March of 2020. Or when we were supposed to get the Kingdom Hearts 3 expansion pack in 2019. And the opposite seems to be true as well. Based on my observations right now, maybe you and I can both agree that people indeed are scared of a stock market crash. The exact opposite thing happens, which is why the S&P 500 rose over 30% in 2019 alone. And that's despite the fact that, oh, the inverted yield curve, the Buffett cash position, Ray Dalio, insert blank here. Where was the crash? Of course, I could be wrong, and we could see the worst crash in all of US history in 2020. There's that too. But I don't think so. But you know what's interesting? I got a message on Instagram of someone named John Doe, and usually when I share these stories, I just make their names up as John Doe, but this guy's name actually happens to be John Doe, and he's basically thanking me for his stock portfolio performing so well, and it's almost mirroring my own. It's not entirely the same, but it's very similar, and he's doing really well. And as much as I would love to take credit for your performance, John Doe, and then I could farm your emails so I can send you a free ebook and then eventually sell you a $2,000 course, I will not take credit, and I will say congratulations for investing, but I will tell you to go ahead, sign up on WeBull, fund your account, get your free money before they get bought out. I am building a larger cash position, but it's not because I want to wait for the stock market to collapse. No, in fact, it's because I want to make one investment that I know is going to pay off 100% rate of return on my money, and that is to pay off my parents' house, because they need to start investing for their retirement because they're behind, and hopefully with this YouTube income, I can help them out a little bit. But more importantly, I want to hear your thoughts and I want to hear your opinions about the stock market. Do you think it's going to crash? Let me know in the comments below. I'm going to have fun responding to everyone. Love you guys. I'll see you all very soon. Bye-bye.